What's good, y'all? It's your boy Marcus, and you're now tuning in into the Be Do Have Investor Mindset podcast. And today's episode is going to be about the IRS. And the name of the episode is The IRS Is Your Friend, Is Your Amigo. Okay. Now, before we get started, I definitely want to give a disclaimer. I'm not a CPA. I'm not a tax professional. This is strictly for educational and awareness purposes only. And if you're looking for professional advice, definitely reach out to a licensed tax professional, get advice from them, do your research, do your homework, and do what's best for you. Now, when people hear about the IRS, they get nervous, they get apprehensive, and they think that the IRS is totally against them. In actuality, the IRS could be your friend. Now, Robert Kiyosaki has a book called the Cashflow Quadrant. There are 4 quadrants on how people make money. It doesn't matter what part of the world that you live in, don't matter what you're doing for work. Everybody fits in these categories. And there are 4 categories. It's E, S, B, and I. E stands for employee, S stands for self-employed, B stands for big business, and I stands for investor. People who are on the left side of the quadrant, which is the E and the S, which is employee and self-employed, they pay the most taxes, okay? Employees pay between 35 to 43% depending on what state you're in. Self-employed pay 50% in taxes. And on the right side of the quadrant, which stands for big business, if you have 500 employees or more, you pay 20% in taxes. And for investor, if you fit in the I category, you pay between 0 to up to 20% taxes. People who are employees or who are self-employed, people always wonder why they pay the most taxes. And in the IRS manual, just to keep it simple, if you work for money, you pay the most taxes. Now, you may not like that rule, but these are the rules, and you have to understand the game to know how to play it. Now, on the right side of the quadrant is big business and investor. They pay less in taxes. And the reason why is because, according to the IRS, people on the right side of the quadrant bring more value to the marketplace, to the economy. So let me clarify. As an individual, I'm sure you bring more value in the home, in your church, in your community, or whatever you do as an individual. But when it comes to the IRS, people who bring true value are people who are in the business quadrant or the investor quadrant. You have to understand that people on the right side of the quadrant who owns businesses, who are an investor, they do what the IRS tells them to do. So if you look at the IRS manual, the IRS literally tells you if you do these list of things, you will get tax breaks. And if you work for money, you'll get penalized, aka tax, because you're working for money. The IRS rewards people who brings value to the marketplace, who brings value to the economy. So for example, if you're in real estate and you're providing housing, the IRS sees that as you bringing value because you're providing housing, you're providing a roof over someone's head, you're providing a roof over a family's head to get their life started. And in return, the IRS is going to reward you to pay less taxes legally. When you're in real estate and you're providing housing, you're actually solving a problem. So the tax code benefits you because that's what the IRS wants you to do. If you just observe, for example, there are a lot of housing projects, right? And the government are responsible for housing projects. And because the government is responsible dealing with housing projects, you could look at their conditions. The elevator is always broken. Every time a repair needs to be done, it takes months, sometimes years. And the government doesn't do a good job dealing with projects. So the government looks for real estate investors to do the job for them, to alleviate the pressure that the government deals with already. And in return, the government says, you know what? You're doing what we asked you to do. Here's your tax benefits. That's how you have to look at it. Every time the government gets involved in something, it's not always a great job. So they have to ask for businesses or investors to get involved, and you get maximum tax breaks. See, most people think that you have to be rich for these tax benefits to benefit you. You can have a job, you can have a normal 9 to 5 and still get tax benefits the way the wealthy does. You do not have to be rich. You don't have to go to a specialized school. You don't have to go to some secret society to find out how to pay less in taxes legally. Just get around somebody that's in the field that you want to be in, learn, do your due diligence, and you can reap the same benefits that the wealthy people do. People think that the tax codes is specifically for a group of people, and that's furthest from the truth. But you have to understand that the tax code can apply to anybody. Anybody with a 9 to 5, anybody's working at McDonald's, Chipotle, you could literally apply these principles, get yourself involved in real estate investing, and you could legally pay little to no taxes and have more money coming in than going out. So the reason why most people think that the IRS is against them, because most people were taught to work hard, make money, pay the most in taxes, and whatever's left over, they get to keep. And I'm here to tell you that investors buy assets to produce value. The IRS is looking for people who produce value, aka real estate provides housing, so that's seen as a value. So the IRS rewards people who create true value on paper, okay? Real estate creates long-term value for this economy, for this country. And when you own real estate, there are so many tax benefits such as depreciation, cost segregation. That's a little bit more advanced, and this is why all this information is in my book. If a fifth grader can do it, you can too. Real Estate Investing Made Simple by your boy Marcus Rodgers. When you cop my book, all this information is in my book. I'm not going to get too technical, but I will briefly explain a few things. For example, repairs, paying your mortgage, getting a property management company. These are a few things that I just mentioned that can be write-offs. Now, all accountants, all CPAs are not created equally, so you have to find the right CPA, the right accountant, and make sure you get the correct deductions and write-offs so you can legally pay less to nothing in taxes. Now, if you have a job, let's just say hypothetically you're making $50,000 a year and you start investing in real estate, depreciation and the income that you make from your property, that one property can literally offset the money that you made from your W-2 job and possibly pay little to nothing in taxes legally because you're providing value in the economy. You have to look at it as an incentive. Like most people use the word loophole like you're cheating the government. And I don't like that word specifically because that word gets used loosely and people can use that word as a misconception like you're cheating the government. So you have to look at it as an incentive. The IRS is giving people incentives to provide value, and in return, you get massive tax benefits. See, a lot of people think it's extremely patriotic to pay the most taxes. And on the contrary, if you're bringing more value to better the economy in the IRS lens, then it's actually more patriotic to pay less in taxes legally because you're providing more value on paper. So don't get this confused. I'm not talking about as a person. I'm not talking about as an individual. I'm talking about in the game of capitalism. In the game of capitalism, true capitalism, if you provide a service, if you provide value in the marketplace, in return, you're going to get rewarded. See, if you get caught up in the propaganda and the news and you hear people saying tax the rich, take the most money from the rich and all this other stuff, they're not talking about people who are on the right side of the quadrant, which is the big business and the investor. They're talking about high paid employees that get taxed the most, but they don't have a business. So you have to understand the difference. So moving forward, when you hear the news or you hear a podcast or you hear somebody in a conversation, when they're talking about tax the rich, they're talking about high paid employees because they work for money. If you're a real estate investor, you're not working for money. You're providing housing. See, when you get a property and you get tenants in your property and they pay you rent, you did not work for that money to get the rent money. You have tenants in your property paying off your mortgage, paying off the taxes, and in return, the IRS sees that as an advantage, making the economy better, and you get a tax break. So here's some cool facts about how the IRS rewards people. There are 3 levels of wealth, okay? There's primary wealth, secondary wealth, and tertiary wealth. Now, primary wealth comes from nature. So when it comes to like raw and natural resources like oil, copper, water, gas, trees, gold, things that naturally come from the earth that people are able to acquire and own, the IRS rewards people massively who fits in those categories. So people who own land, farms, oil fields have primary wealth because the earth provides that naturally and people are able to make a business from that. So that's primary wealth. Now, secondary wealth is products that are made from the resources from the primary wealth. So for example, stores like Home Depot, they buy lumber, which is wood, and they sell it for a profit. Oil becomes gasoline, crops become food, cotton becomes clothing, land becomes houses. There's a massive list that primary and secondary wealth reap the benefits because it provides the most value. Without farms, without land, without these natural resources, the world can't function. And the IRS knows that. So in return, they reap the most benefits. Now, the third level of wealth is called tertiary wealth, which means paper assets. So paper assets are like stocks. They represent value, but they're not physical resources. So for example, a stock is a derivative of a real business. I'm going to say that again. A stock is a derivative of a physical business. It represents ownership on paper, but it's not the business itself. So if you ever hear situations where the stock market crash, the first people to suffer are people who are in the tertiary wealth, the third level of wealth, because that's the first people to lose. When a stock market crashes, the first people that know when it crashes are people who are in the primary and secondary wealth, because the primary wealth, that's where all the natural resources are coming from. But when the stock market crashes, the last people to know are people who are in paper assets, which is the last level of wealth. So the first people to get out if a situation happens are the people who are in first and secondary wealth, because they're the first to know. They create the market. They know what's about to happen. So for people who are shocked or who lose money in the stock market, it's because they're the last people to know, because they're on the bottom of the totem pole. So I know it could be a little confusing, but if you can understand primary wealth, secondary wealth, and tertiary wealth, the IRS rewards primary and secondary wealth the most because they create the most value. Most people who get into stocks, and this is not to throw any shade to people who are in stocks, you do not have to be sophisticated or study at all to be in stocks. Now, there are people who make fortunes in stocks, and kudos to them. If you could get in where you fit in, make your money in stocks, make it happen. But you do have to understand that the people who suffer the most are the people who are in paper assets. So I am a bit biased because I love real estate. I am in real estate, and I'm closer to people who are in the primary wealth category. So that being said, in return, the IRS rewards people who are in primary wealth and secondary wealth. Now, if you're in stocks and things are working for you, stay there. What is it? They say if it's not broke, don't fix it. Make your money. But start doing some due diligence and start understanding how primary wealth and secondary wealth works in the economy. So what does this really mean for you? Most people don't understand business and taxes. Once you understand these two and understand that the IRS is more in your favor and not look at it as an enemy, then your philosophy starts to change and you start thinking like more an investor. So moving forward, when you hear people on the news talking about certain things, take a step back, have your investor lens on, and understand that they're not talking about you taxing the rich. This podcast is for the rich. This is for people who aspire to be rich mentally, spiritually, physically, and live your best life. So while you're on this planet, understand the game. And in my opinion, true patriotism, being truly patriotic, in my opinion, is legally paying less in taxes and doing more for the country. That does not mean or dismantle or discredit anybody who's working a job. If you're working a job and you're doing a great job, continue to do that. However, start looking at other avenues to help you offset your taxes as a W-2 employee and bring real value according to the IRS. You could be a person of value as a person in your home, in your community, in your church. And on the flip side, you could bring value on paper and in business. So moving forward, if you hear about the IRS, it's something not to fear. It's something to gain confidence from and increase your IQ. So this is why real estate is one of the strongest wealth building tools available. The topic I talked about today is definitely in my book. The name of the chapter is The IRS Is Your Friend. Cop my book. If a fifth grader can do it, you can too. Real Estate Investing Made Simple by your boy Marcus Rodgers. Go to my website, ascensionmgnt.com. That's ascensionmgnt.com. Follow me on TikTok, The Ascension Team. Subscribe to my YouTube channel, Ascension Team 1. It's your boy Marcus, and I'm out.